Hey, how's it going? Just jumping into things. We had a little bit of a rocky start to the week, right? And we're going to talk today about CPI, which came out. We're going to talk about what Jerome Powell said yesterday. He had a very long interview yesterday. Here we are. Um, Yeah, it is a nasty day today. So this came out just yesterday. CPI, disconcerting start to the year, right? And what we're seeing here is these numbers at 3 and then 3.3 for, the X food and energy number. Those numbers, they are much higher than people wanted to actually see, right? And that caused some concern in the marketplace, and for a couple of reasons, right? One is we've had a whole bunch of interest rate cuts um, to get to this point, and we're looking for this number to go down, right? And fair enough, we can't if a reading comes in a little bit hot like it did just yesterday, then so be it, right? However, we are looking to Jerome Powell to potentially cut rates even further and stimulate the financial markets, stimulate the economy as a whole by doing so, right? But what we're seeing here is this is being looked at as like, something with a double impact, right? And that double impact is not only that, yes, you had a higher reading, but then the other side to this is we are also being threatened with tariffs, which we know are typically, they typically cause an inflationary effect on the economy. Okay. So,
Yeah.
there's
What's
a
what's
double
what's I
concern
just
there.
want to just comment here, Matthew. What's going on here is pretty simple, guys. We thought we were done with inflation, but we might not be done with inflation. And you remember from 2022 how much the stock market does not like inflation. Why does it not like inflation? Well, it doesn't like inflation from a multitude of reasons. One is if you're borrowing money to grow your company, the cost of borrowing is going to be higher, right? It's going to be making it more difficult to borrow money to grow your company. Then secondly, your consumers, the people who are buying your products and or services, well, you've just raised the cost on them as well. So now you have not only increased costs for you, you have increased costs for them. So if the interest rates are high, or if interest rates are high, the person who's borrowing money from you, or borrowing money in general, sorry, it's going to be a problem for them. They're going to have less disposable income. They're going to have less income to spend. Are they going to buy your products and services? Probably not. Or maybe they will, but maybe they won't. You don't know. It's uncertain. Okay, so think of that logically speaking, okay? We're not sure if we're done with inflation yet or not. We thought we were done with it, right? But we've heard in the last little while, CPI is running a bit hot in the states. We haven't. We're not going to decrease interest rates as much as we thought in the states. That's established. That's happened for a few months in a row now. So month one, month two, month three. So we've had three, or I believe this is the fourth hot reading we've had on the CPI. Fourth one in a row. Maybe it's third, maybe it's fourth, but I can't remember. But either way, it's been a problem. So now companies can't borrow and invest. They're not sure. Okay. Second thing is the consumer. Well, the consumer is not going to benefit from lower interest rates. So are they going to buy and consume? Maybe not. And then you have this other issue, looming tariffs. Looming tariffs are also really bad. They're almost as bad as tariffs themselves, right? Because you don't know as a company or as a consumer how it's going to impact you. You may lose your job. You may lose your ability to provide. You don't know yet. Well, we'll see what happens. So this is all culminating into a bit of an issue right now. But the main issue I think to focus on right now is, are we going to have inflation? Is inflation going to be a problem?